Hello students. Let's start with the new relief. We have studied the three relief in the previous session, students. The first relief was business asset disposal relief, then rollover relief, and the investors relief. Yes, and we have done the sums also on those relief, students. And I have given you one homework sum also. I hope that you have done that sum. And if any kind of queries there, then just message me. Yes students, now in this session we will going to cover the another most important kind of the relief. The first one will be the gift relief, then principal private residence relief, and the letting relief. These three relief we are going to discuss in today's sessions. But let's start with the first relief, which is the gift relief, students. I must say that the gift relief is almost similar to the rollover relief, students. I'm not saying that the concept is same, but how the rollover relief was working previously, in the same manner the gift relief will going to work technically. Okay, but the concept is different, students. Rollover relief was asking to make a reinvestment in the new asset. Okay, yes. But the gift relief will going to ask you to make a gift to either connected person or to anyone. Okay, so gift relief is a very specific kind of the relief where one person, suppose A, is transferring the asset as an free of cost or at a discount to person B, then we can say that this is the transaction of the gift. Students, yes students, please remember this gift relief transaction is first of all will demand to have a transaction of the gift between two person, and the meaning of the gift is not a totally free gift. Like free gift means without any consideration. If you are giving something to someone, then it's a totally free gift. Like if suppose there is one sister, and if I'm gifting mobile phone to my sister, then I will transfer the asset to my sister, but I will never ever going to take any penny from my sister. That's consideration will be zero in this situation. That's called a free gift. But it may be possible that suppose I do have my mobile phone and my friend wants this my mobile phone. So I will tell my friend that, see, the market value of the mobile phone is the 10,000, but as you are my friend, I will give you this mobile phone at a price of the 7,000. Okay, this is called a sale at undervalue, and you have to understand, students, that in both this condition the person will going to get the gift relief compulsorily, and yes, obviously person should claim gift relief, obviously. Okay, so whether it's a zero consideration kind of the gift or it is a discounted consideration kind of the gift, in both the condition, in both the situations, students, the person will get the gift relief. That is the first important thing that you have to understand. Okay, now as I students told you, either it can be the purely and gift without any consideration, or it can be either a sale at undervalue. But it's almost, students, we can say that it's almost logical that obviously why the person will going to give a free gift, or why the person will going to give the transfer the asset at a undervalue, because the other person, the receiver person, will obviously be the connected person. Either the relationship can be the father son, the relationship can be the friends, it can be brother sister, it can be the mother father, it can be the mother and daughter, it can be anything, but at the end it will be, students, this gift or sale at undervalue will be will happen at between the two parties who are connected. Okay, why would I give discount to any third party whom I don't know, or who is not my relative? Okay, so that is the simple logical aspect that we have to understand. Now students, let's just assume that first of all that okay, there is a gift. First, let's understand the gift aspect first, where the consideration is zero. Let's consider the first of all gift aspect. Assume there was a father who have transferred the asset to son. Obviously, how the father will take the consideration from son? Obviously, he will not take any consideration. Father have transferred the residential property to son. or assume not residential property, assume that it's shares. Okay, it's shares transferred by father to son, and obviously father will not going to take any amount from son. It's a gift from father to son. The occasion can be anything. Occasion doesn't matter for the CGT purpose, for the relief purpose. It can be birthday or it can be without any occasion also. Father can gift anything without any occasion also. So just assume that there is a shares transferred by father to son. Now students, in this situation, as this is the transaction of the gift students is a chargeable disposal. We have studied at the first chapter of the CGT students. In this first chapter I may have like told you that even if the gift do not have any kind of the consideration, but still it will become our chargeable disposal students. So you can say that if all the three basic conditions are getting fulfilled, then we have to prepare a proforma in this situation. But students, right now the disposal is made by father, so we will going to prepare a CGT proforma for father only right now. Okay, and right now it's the year of 2020. Okay, so father have disposed of the shares. It may be possible that son will once again in future may sell these shares to third party. Okay, but son may sell in the year of 2025 after 5 years. Then once again another CGT proforma should be prepared, but it will be for son on the tax year of 2025, because in the 2025 son is making the disposal, son is transferring the asset to third party. Okay, so whenever it's the case of the gift students, we have to prepare a proforma compulsorily. I'm not saying that we have to pay CGT, but just I'm saying that we have to prepare a proforma. So that is why you can see that we are preparing the proforma for the father. But students, how the proforma should be prepared? It's a disposal proceed less cost. Okay, so over here students, the cost will be the actual acquisition cost, because the father may have purchased this asset, these shares from the market or from another third party. So the cost should be actual one. So let me write up 10,000 pound as an actual cost amount, and the disposal proceed students will be your market value, because students, in the first session of the CGT I may have told you that if it is a case of the gift or if it is a case of the sale to connected person, we cannot write the actual disposal proceed, we have to write the market value over here. So right, so according to that rule students, we cannot because we are learning a new concept, we cannot just break a previous rules. We still have to stick to our previous rules. We still have to follow the previous rules. Okay, so that is why we compulsorily we have to write the market value, and we cannot write a zero disposal proceed over here. We cannot write actual disposal proceed over here. Okay, so that is why students, as this is the transaction of the gift, we will going to write the market value. Assume the market value is the 20,000, so the gain amount will be 10,000. Now students, now the proper gift relief concept will come into the picture. Until then we were just doing the normal stuff. Now students, as I already told you that gift relief will technically work just like the rollover relief. What we will going to do? We will going to deduct the gift relief amount of 100% amount will be deducted as a gift relief, because it is a free gift. It is not a sale at undervalue. It is 100% free gift. There was no consideration received by father. Okay, so that is why I will going to get the 100% gift relief. Why? Because in this situation consideration was zero. That is why. And why its consideration was zero? Because it was a free gift. Okay, just like that, if suppose I transfer this mobile phone to my sister, then it will be free gift. I will never ever going to take any penny, any amount from my sister, obviously, right? So that is the free gift. So in this case of the free gift students, I will going to give 100% gift relief, because my consideration amount will be zero. Okay, I can make a free gift to my friend also, students, but like that is not logical one, and we are just talking about from normal our example. We have just taken example from our life. I'm just taking up the logical example only, otherwise actual scenario can be anything. The simple rule is that if it is a free gift, if it is there is a disposal proceed is 0, then we have to give the gift relief for 100% gift relief. Okay, now students, so in this situation, students, our gain, chargeable gain will be 0. It's a very simple one, and the gift relief, once again, students, just like the rollover relief, is nothing. It's just a deferment. Okay, so it's just a deferment, and it's not like that we will never ever going to have to pay the CGT. It's just like we have just got a deferment. That means whenever this son will sell these shares to third party in the year of 2025, at that time we will have to pay the CGT. Okay, so it's same like the rollover relief, students. At the rollover relief also we were waiting for disposal of the new asset. Over here we are just waiting for the disposal by the son. It's otherwise it's nothing, almost same situation is there. Now students, just like rollover relief, the deferment or deferred gain will become chargeable by way of, students, by calculating the base cost. So please remember, once again over here we have to calculate the base cost. So you already know the formula for the base cost, students. It's nothing but the original cost, or you can say, students, because the son over here, students, what we are discussing is that original cost. Okay, so father have transferred the asset to son. Okay, and father have not taken up any amount. That means disposal proceed is 0. The father have transferred the shares. So we can say this actual disposal proceed for the father is 0, and actual acquisition original cost will also be 0 for the son. Okay, so over here, students, we cannot calculate the original cost by like just original cost cannot be written as in 0. Otherwise base cost will be in a negative format. So we cannot just write the 0 amount over here, students. What we need to do, students, we just have to think that assume, just see, if I want to give you the direct answer over here that what should be written while calculating the base cost, then I will tell you directly that original cost amount should be the market value at the time of the gift. But I don't want to give you the direct answer, and I don't want you that you mug up this sum or you mug up this whole treatment. Okay, or I can say that whatever market value was taken, whatever disposal proceed was taken by the previous party has to be the cost of the next owner. That means whatever disposal proceed is there, the same amount should be written as an cost for the next transaction, for the next proforma. Okay, so it's a very logical one, students. Like, let's just take an example. Assume that this is not a transaction of the gift. It's just a normal transaction between two friends. Okay, it's a normal transaction happened at a market value itself. Okay, just assume, forgot that nothing happened. Okay, just assume that this is the phone. I am giving you this phone. Okay, then what we usually do, if suppose I am giving you this phone, then what I will going to do, I will going to write disposal proceed. The phone's value is 2000. So I will transfer this phone at a price of 2000, and I will going to deduct my cost. I know that my cost will obviously be more than 2000. Okay, my cost can be 3000, or disposal proceed can be 1000 and cost can be 2000. But just assume, just take in a hypothetical situation that the disposal proceeds is 2000 and the cost is 1500. So I can say by selling this phone I have got the gain of £500, and I will pay the CGT on this £500 because it's a normal transaction, it's not a gift. Okay, and whenever you will sell this mobile phone into the market to your another friend, then what you will going to do, you will going to write actual disposal proceed. Now actual disposal proceed can be £3000 also, and you will going to deduct the cost also. And what exactly is your cost? Your exactly cost is £2000 that you have paid to me. And if this is the normal transaction, students, every figure you can think is a logical one, and you can, because why this situation looks very logical, because you write each and every amount as an actual amount. Each and every amount is an actual amount. I have received the disposal proceed of 2000, you have paid me the 2000, so that will become your cost. So we can clearly say that whenever there is a seller, students, whenever there is a seller, for seller the disposal proceed amount, whatever is the disposal proceed amount, the same amount will become the original acquisition cost for buyer. Okay, so because on the basis of that logic, students, what I am going to do over here, that I will going to assume that whatever is my seller, now over here, students, the father is the seller. Whatever is the disposal proceed of the seller, the same amount will become the cost for buyer. Over here the son is the buyer. So that is why, students, the original acquisition cost will be 20,000. It is nothing but 20,000 is nothing but the market value at the time of gift, at a gift date. So either, students, you can just have the simple logic that okay, my previous proforma's disposal proceed is 20,000, so this proforma's original cost will also be, students, 20,000. That is the simple logic you can also understand, or else you can also mug up the simple thing that original, in this situation of the gift relief, original cost will be your market value. Okay, market value at the time of the gift. That kind of statement also can be mugged up. You can do anything, student. The same thing you can find in our notes also. Yes, so now let's come back to our gift relief, students. But over here, students, I cannot directly write the cost amount of the 20,000 because we have to write the base cost. So we were calculating the base cost, students. For that, we do now have the original cost of the 20,000. I know this 20,000 is not actual original cost. It's the market value, but still, students, we can't do anything. We have to take the 20,000. I know that son's original cost is 0. Son's original acquisition cost was 0, but still we have to write it. Then after, students, I will going to write the gift relief GR, or I can also write that gain deferred in the past by way of a gift relief. And whatever is the gift relief, I will going to deduct. 10,000 was my gift relief. So now my base cost is the remaining amount, which is the 10,000 pound. Okay, so I will going to deduct the 10,000 from here. Whatever is my disposal proceed by selling these shares, is assume that it's 30,000, then I can say that my gain, chargeable gain, will become, students, a 20,000 pound. This 20,000, the total 20,000 of the gain is there. It is the gain. 20,000 is the total gain from previous proforma as well as the current proforma also. Okay, so students, this is how the gift relief should be treated. This is how the proforma of the gift relief will look like, students. It's very simple. Still, if you have any query with the proforma, students, then please feel free to ask me. Without conceptual clarity, without proper understanding, students, it will be difficult in the examination to solve the sums. Okay, so okay, let's students move forward. And students, yes, we have got the idea that in which situations of the gift, students, we will we will get the gift relief, and how the proforma of the gift relief will work. Now, students, let's just assume that it's a transaction of the sale at undervalue. Okay, now, students, in this situation of the sale at undervalue we obviously assume that there was one friend 1 F1, and there was one friend 2 F2. Okay, friend 1 have transferred the shares but it is discounted price. Okay, so the friend who have paid only 15,000, actual market value of the shares was 20,000 pound, but we have given the discount to our friend. Okay, I know this is not possible practically, or we will not going to give anyone this much amount of the discount, but it's just take a hypothetical situation. Assume that the market value of the shares is 20,000 and the disposal proceed that we received is the 15,000. So what I will going to do, we will going to prepare a proforma for F1, because right now in the year of 2020 only and only the disposal is made by F1. Okay, so I will going to write the disposal proceed. Now students, in this situation, as this is the case of almost we can say discounted price gift, or we can not write over here, it's a connected person, we have transferred the asset to connected person, so we cannot write the disposal proceed of actual disposal proceed, we have to write the 20,000 of the disposal proceed, which is the market value. Students, I already told you that we have to write the market value if it is the case of the gift. Okay, so and then after students, we will going to deduct our original cost of the 10,000, and if you see our basically over here our gain amount is coming up as in 10,000. Okay, but now students, in this situation, as our consideration amount is not zero, we cannot give 100% gift relief. No, why? Because we have received some kind of the disposal proceed, we have received some of the kind of consideration. So if, as I already told you in the previous proforma, you can give 100% gift relief, you can give 100% gift relief only and only if your consideration amount, your disposal proceed, actual consideration amount is zero. But over here it's not the case, we are receiving the consideration of 15,000 pounds, students. So because of that students, we have to see that how much gift relief will be available in this situation. And now students, so we don't know the gift relief amount, and so that is why students, we can't say what will be the chargeable gain amount. So now students, just like the rollover relief, HMRC is saying that, see, we will not going to give you the gift relief amount right now, we will going to provide you the rules for determining the chargeable gain amount, and the gift relief amount will become your balancing amount. It will become your balancing amount. Okay, so let's see that how it's, see, so the same kind of the rules we have studied at the time of rollover relief also. In, if you see the partial reinvestment situation of rollover relief, you will understand that how this kind of the stuff works. Okay, now students, the rules over here made by the HMRC is that your chargeable gain will be nothing but the consideration amount minus actual consideration amount, let me just clarify, it's actual consideration amount minus your original acquisition cost. So over here in this situation, students, our actual consideration is 15 minus our cost is 10,000. So that's why our chargeable gain will be 5,000 pound. So I will have to write the 5,000 pound, and so my remaining balancing amount will become my gift relief, which is the 5,000 pound. Now students, if you see the whole rule, they are saying nothing but they are saying that whatever you receive as in consideration over and above the original cost amount will become your chargeable gain. They are doing nothing but they are just following the concept of the cash flow. They are saying that, Dipan bhai, you have incurred the cash outflow of 10,000, which was your cost, and you have received the cash inflow of 15,000. So you compulsorily have to pay the CGT on the realized gain. In this situation, students, our original cost was 10,000. We have sold this asset at a price of 15,000. So we can say that our realized gain is 5,000. So that is why that amount will become chargeable. And I have previously also told you that, students, the CGT works on the basis of the cash flow concept and the realization concept, students. Why in the previous example, why in the free cost of the example, why they have given you the zero, this kind of the structure where you will have the zero gain? Why? Because in this situation, students, in the case of free gift, free gift between father and son, there is a zero realization happening. Why? Because father's actual cost was 10,000, which was their cost cash outflow, and the father's cash inflow was a zero. So that is why we can say the person is having the zero realization of the gain. Zero realization of the gain. So that is why, students, there is a slight difference between the, if it is a 100% free gift or if it is a sale at under value. Sale at under value, in the case of the sale at under value, it's very logical to charge some kind of the gain right now and give the partial amount as an gift relief. Okay. So this is how, students, sale at under value will work. Now what will happen, student, if our friend 2, F2, will sell the shares into the market in future, F2 into the market to third party in future at the time of 2025, students, as in the past we have claimed the gift relief of 5,000, students, we cannot write the simple cost, we have to write the base cost amount over here. I know that we have not got 100% gift relief over here, but still we have got the gift relief. Even if it's £1, then we still have to calculate the base cost, but the disposal proceed can be 30,000. In over here, students, base cost will be calculated like original cost, but original cost, please remember, original cost is 15,000, but we cannot write the 15,000, we have to write the market value. Why? Because, students, as I already told you that the seller's disposal proceed amount and buyer's cost amount should be equal. So if seller's disposal proceed amount is 20,000, then buyer's original acquisition cost should also be 20,000, which is nothing but the market value at the time of the gift. And then after I will going to deduct the gift relief amount, which is the gain deferred in the past, which is the 5,000. So now we can say our base cost is £15,000. Please don't get confused between that, sir, in this situation our base cost of the 15,000 is same as our actual cash outflow, actual cost. No, it's just a coincidence. Don't just compare with the original cost, actual cost of 15,000 with the base cost. No, it's just a coincidence that this figure of 15,000 and base cost 15,000 is also like same. No, it's just a coincidence. So over here, students, let's come to the point. Over here the gain amount will be 15,000. This 15,000 consists of the 5,000 of the deferred gain we have got by way of gift relief, and the remaining 10,000 is the actual gain for F2 for selling the asset to third party. Okay. So students, this is how students, sale at under value transaction should be treated, and we will going to do the proforma just like this if it's a sale at under value. Now, students, proforma is common in whether it's a free gift or it's a sale at under value. Just there is a slight difference between on students how much amount of the gift relief you will receive. It's a free gift, then 100% gift relief will be allowed, and if it's sale at under value, then gift relief will be depending on the how much the chargeable gain you are writing over here. Gift relief will be balancing amount. Otherwise, each and everything is similar in both the cases. Okay, so proforma is almost similar, just gift relief amount will differ, right? Now, students, so okay, we know that how the gift relief proforma and everything will work, but students, we don't know right now that what are the conditions of allowing the gift relief, because we have seen in the previous relief also, students, that in almost each and every relief we have seen lots and lots of the conditions which we have to compulsorily mug up. Okay, but in this gift relief we have just studied the proforma. Otherwise there is no condition we have learned. There is only one condition is there, which is the gift. There has to be some gift. It can be free gift or sale at under value, students. Okay, free or sale at under value. Now, students, but apart from that, there is another, students, condition is there. Whatever asset that we are transferring from father to son, or from friend 1 to friend 2, or from Dipan to his sister, whatever asset that we are selling, that asset should be a qualifying asset. It has to be qualifying asset. The first qualifying asset is nothing but asset used in the assets in the trade of donors. See over here, who is the donor? Father is the donor, F1 is the donor, and Dipan is the donor. The transferor will become the donor. Okay, so that's why the word written over here is the donor and donee. But asset used in the trade of the donors, personal trading company. Now what does it mean by personal trading company? It's nothing. Personal trading company is the company on which we do have the shareholding of 5% or more. Okay, so if any kind of the asset we are transferring, like it may be possible, like simple example I can give, that this AC, air conditioning is an asset, AC is an asset which was previously used in the trade of donors personal trading company. This AC was previously used in the Career Compass business. It was used by donor, by Dipan Ghataliya in personal trading company. Yes, Career Compass is my personal trading company. I do have 100% stake in this company. So we can say the AC is an asset used. Okay, AC, it was used in Career Compass business, and now whether the Career Compass is owned by Dipan Ghataliya for more than 5% or not. Yes, it was owned by Dipan Ghataliya for more than 5%. Yes. Okay, so that is what they are asking, that whatever asset that we are transferring, whether it's shares or whether it's a laptop, whether it's AC or whatever asset that we are transferring, that asset has to be used in the trade of donors personal trading company. Okay, then after, the next qualifying asset is the unquoted shares and securities. Unquoted shares and securities. Please remember, shares as well as securities, that means loan notes, debentures, bonds will also be included. And second thing, I have not written any kind of the words like personal trading company for this second asset. That means if you are having the 2% stake in the ABC company, then and the ABC company is unquoted company, then also this 2% stake will become my qualifying asset. Why? Because the personal trading company or 5% shareholding requirement is not there if it is an unquoted shares. If it is unquoted shares, please remember, right? So compulsorily you have to mug up this whole list of the qualifying asset. Now then after, the third asset is, students, the quoted shares and securities. But in a personal trading company, that means if suppose I am transferring the 2% stake of the ABC company, but the ABC company is a quoted company, then in that situation I cannot get the gift relief because the company is a quoted company. I do have quoted share, but this ABC company is not my personal trading company. I do not have 5% stake in the company. So that is why if I am gifting the quoted shares, I will not get the gift relief because my shareholding is less than 5%. How much minimum shareholding is required if you are transferring the quoted share? The 5% of the shareholding is required, because the personal trading company word is written in the third asset. Okay, then after, the fourth asset is agricultural property. But students, you can transfer the agricultural property to any person. You can get the gift relief only and only if agricultural property relief is available in inheritance tax chapter. Okay, we will going to learn one kind of agricultural property relief, APR, in the inheritance tax chapter. If APR is available, then gift relief will also be available. Please remember, there is not any kind of condition like personal trading company or not. That kind of condition is not there, but simple condition is there. If you want a gift relief for agricultural property, then you first of all have to check whether you get agricultural property relief or not. If APR is available, then GR will obviously automatically be available. Okay, so I know these things are like not easy to remember, not easy to mug up. I know it will take time to mug up the things, but for that, students, you compulsorily have to revise the notes regularly. Okay, then after, let's come to the fifth point. The fifth asset is the chargeable lifetime transfer. Once again, this CLT will also be, students, you will understand CLT meaning in the time of at the time of inheritance tax chapter, but temporarily let me just give you the basic idea. CLT, chargeable lifetime transfers, is nothing but it's a transfer to trust, any kind of the gift given to trust, whether it's a charitable trust or simple trust, it doesn't matter, right? And any kind of the asset transfer to trust will going to be eligible for gift relief. Okay, and that is the simple 5 qualifying assets list is there. If you are transferring the asset which is in the list of qualifying asset, then and then only you can, students, claim the gift relief. Now students, if suppose that if I am transferring this mobile phone to my sister, right, then I cannot claim gift relief because mobile phone is not a qualifying asset. Okay, it may be possible, it may qualify if this mobile phone was used for career compass business, but my mobile phone is my personal asset. It may be possible, suppose I am transferring my residential property to my sister. Now residential property, how residential property can be used for business? It cannot be used. Now residential property is also not an unquoted share, it's not an quoted share, it's not an agricultural property. I am not transferred any asset to trust, I have actually transferred the asset to sister. So once again, I can say if I have transferred the residential property, I cannot get the gift relief. No, it's not possible. Compulsorily, the asset that you are transferring has to be the qualifying asset compulsorily. Okay. Now students, so here we can say that we are almost done with the gift relief. Now there is only one small portion is left with, and okay, let's learn it. Yes students, so now the last concept in the gift relief is a little bit kind of the practical one. Students, just assume, just let's take an hypothetical example, and not hypothetical, but let's just assume the practical kind of scenario, and let's just see that how people can take undue advantage of this kind of the gift relief. Okay, and how the people can get the deferment for years and for years and for years and years. Okay, so let's just see how the things works. So there assume that, let's create one scenario. There was one father. Okay, there was one father, and father was basically having the residential property. Okay, father was having the residential property, some kind of the offices, just as an investment, offices, some kind of the shares, and some kind of the another kind of the little bit kind of the investments were there with the father. But now what happened over here in this situation, students, when the father tried to sold, when father tried to gift this all the assets to son, then at that time, students, gift relief was not available. Gift relief is not possible in this situation, and students, they compulsorily have to pay the CGT compulsorily. Okay, so that is why father thought that we have to do something in this situation. I don't want to pay CGT. Okay, they tried to create one kind of the loophole from the rules. Okay, so what the father did, father once thought that let's create one company named A company. Okay, company named A company, and A company was unquoted company, and 100% shares were being held by the father. Okay, the A company's total owner was who? Father. Okay, now A company is not a kind of trading company. A company is just created on paper, which is called a shell company. The shell companies are the companies who like just runs on paper. They do not actually do any kind of the business. Okay, so what happened is that father what father did, father like created one company, and A company have then purchased different kinds of the investments, and then some kind of the investment purposes, shares and offices and everything kinds of the asset was then held by A company. Okay, and yes, shares and what we have taken example, yes, offices and those kind of the investments and everything was being owned by now a company, and who is owning this whole a company? The father. Okay, so can we say this all the kinds of the investment was originally indirectly owned and controlled by father? Okay, so in this situation, please understand this situation and understand this scenario. And now a company is a shell company, okay, whose 90% assets are investment assets, and only 10% assets are just business assets. Okay, we got the idea. Now what father did, students, please understand what father did. Father sold the shares. Sold the shares. Okay, so father sold the shares to son, and now in this situation, students, as the father sold the shares of unquoted company, the father and son have got the gift relief. So now, students, you see, just simply see that how they have transferred the shares, but indirectly they have transferred all the kinds of the investment, all the kinds of the shares, all the kinds of the offices. They have transferred the control of all the investment to son without paying any kind of the CGT. Because when students simply apply the logic, when the CGT can apply, when the CGT can be levied when you dispose of some assets. Now in this situation, students, none of the investment property is being disposed to son. No, any kind of investment property is not sold to son. So that is why no CGT should be levied on these investment properties. Why? Because the investment properties are still being owned by a company, right? So as there is no disposal of the investment property, no CGT should be levied. Now you will tell me that, sir, then what asset is being disposed of? The shares is being disposed of, students, and the unquoted shares is a qualifying asset for the gift relief. So whatever, students, you have disposed, whatever gift you have made, you have got the gift relief. So you have got the deferment. Obviously you have got the deferment, and students, it is also very easy to manipulate the market value of the shares and of an unquoted company. Okay, the actual value can be different, and you just say that this is the market value of the unquoted company, and blah, they are like, it's done. So it's very easy in this kind of the situation to manipulate the gain and to claim the gift relief. And this is how the very kind of, we can say, the legal loophole of the gift relief. This is a purely legal loophole which you cannot say that it's illegal. No, it's a simple legal loophole, and people were taking the undue advantage of this loophole, right? So that is why, students, to just overcome this and to just block the people, to prevent the people to claim this kind of the group relief, and to prevent the people to take undue advantage in this situation, HMRC have created a new rule, which is called the shares in the personal trading company. If you are having, students, quoted shares or unquoted shares in personal trading company, then you have to follow this rule. Now in this situation, students, if you are having quoted or unquoted shares in the personal trading company, then you just have to prepare a proforma. Okay, so in this situation, father is giving the shares to son, right? So what you will going to do, simply going to write the disposal proceed, the market value, this market value is the 20,000, and then you have to deduct the cost, and the cost is 10,000. Assume the cost is 10,000, and you will have the gain of 10,000. So generally, students, what you will going to do, as this is the zero consideration free gift, you will going to apply the gift relief of 100% amount, which is the 10,000. But HMRC will prevent you for directly writing the 10,000 or directly giving the gift relief of 100%. They will ask one simple question: are you selling the shares of personal trading company? Yes, we are selling the shares of personal trading company. Then your gift relief formula will be, students, total gain multiply by chargeable business asset divided by total chargeable asset. In our situation, in our example, students, our total gain is 10,000. Our chargeable business asset is only and only 10%. Our business asset was there. Please remember. Okay, I told you that yes, our business asset is just in 10%. Business asset can be just on paper, it can be just simple bank balance, or it can be just simple student's office, small office. So our business asset is just in 10% and divided by our chargeable total asset. So how much total asset we are having? 100% is the total asset. Okay, in the examination you can be given the value also, like we are having 100,000 pound of the business asset and we are having the 1 million pound of the total asset. 1 million is the total asset. So it can also be possible. So you can also write the direct amount also, but over here I am just taking up the percentage. So because of that, students, I can get the gift relief of only and only 1,000 pound only, even if it is a zero consideration situation. But with the case of students shares in the personal trading, if you are transferring the shares in the personal trading company, you have to apply this formula, and because on the basis of this formula you can allocate, you can allow the gift relief. So I can just take the gift relief of 1,000 pound and my remaining chargeable gain will be, students, 9,000 pound. So because of this particular formula itself, students, because of this formula, people cannot take the undue advantage of this rule, right? So see in this situation, students, the good people will also get the advantage. The good people are the ones who genuinely runs the company, who genuinely runs a company, who genuinely have 95% of business asset. They do have, students, 95% of the business asset. So when these kind of the genuine people do transfer the shares to Sun, then at that time, students, what will happen, whatever is the total gain, we will going to multiply the business asset, which is the 95, and total asset is the 100. So in this situation, students, this kind of the genuine people will get the more gift relief of 9,500. But the people who are not good people, who are trying to take the advantage, will get the less gift relief because of this simple formula. The formula is nothing but the formula is just asking you to take the proportion of how much the business asset you are having out of your total asset. So if you are a genuine person, if you are having the higher proportion of the business asset, you will get more and more gift relief. But please remember, this kind of the formula should be applied only and only if it is shares, and it's shares in the personal trading company, and the shares can be quoted as well as unquoted. It can be both, it can be anything. Okay, so students, I hope that you got the idea in this situation. So students, here we can say that here we are done with this concept of the gift relief. I was planning that, students, I was planning basically to complete 3 relief, but because of limitation of the time, students, we are ending this session particularly right now, and we will going to learn the principal of private residence relief and the letting relief in the next session, and then after we will do the practice also, don't worry. But right now we are done with this session, and we are done with the gift relief also, students. Feel free to ask any if you have any question, then thank you.